The US stock market closed last week with confident growth in light of upbeat macroeconomic data. Besides, the US seems to be winning the battle with the pandemic. The mass vaccination has reached its peak, so experts hope that the US is likely to avoid the third pandemic wave. This is a good news for US stocks. This week is full of important events and reports on the US economy, a policy meeting of the US Fed, GDP data for the first quarter, data on personal income and spending, and others. These events will act as market catalysts. The Dow Jones Index closed on Friday with the least gains among the three key indexes. The Nasdaq and the S&P 500 logged weekly growth of 1.4% and 1% accordingly. The Dow Jones added just 0.7% last week. Today, the index of US blue-chip stocks is trading at near 34,050 points. It's expected to trade in the narrow corridor of 33,700 to 34,200 points. Analysts do not see reasons for a further climb. The market has already priced in all positive factors. At the same time, there are no serious headwinds to cause a market plunge. The stock market is set to fluctuate at around the current levels until it finds a strong impetus for a slump. Perhaps economic data or other important news from the United States, which are due this week, will be blamed for the bearish momentum. The US dollar index remains feeble. It closed in the red on Friday at about 90.70. Today, it's expected to trade in a tight range of 90.20 and 91.20. Nevertheless, experts found out signs that the US currency is likely to moderate and halt its decline. The market will certainly be inspired by the solid US economy and high yields of dollar-denominated assets. The USD card pair is trading lower at near 1.2470. The price is squeezed by the pressure from the greenback bears and the loonie bulls. They could be oil exporters. Nevertheless, the Canadian dollar found strong support at about 1.2360, where there is a lower border of the pair selling. The upper border is seen at near 1.2550. In the second half of the day, Bitcoin is trading at around $53,400. The most popular digital token again sank below the level of $49,000 over the weekend. On Monday, we see that Bitcoin managed to rebound off support and set about a recovery. The question is whether it's the beginning of a new uptrend or just a bounce before a further fall. From the technical point, there are signs of the emerging rally, so the odds are flat that Bitcoin will plunge again before it breaks important short-term resistance. Hence, the number one cryptocurrency is expected to trade at about $50,500 to $52,500 in the coming few days. Alternatively, the crypto asset might be able to fix above the level of $53,500 and continue its further advance. However, crypto bulls have to make brave efforts. Last week, the US stock market showed signs of exhaustion and seemed to be ready for a correction. The reason could be the looming tax hike to back funding for a new stimulus package worth $2 trillion proposed by Joe Biden. Today, market participants are discouraged by the data on US durable goods orders, as the print in March still undershoots pre-crisis rates. The highlight of the week is the policy meeting of the Federal Reserve on Wednesday. Besides, the market is anticipating the flash US GDP data for the first quarter. Such market-moving data could trigger gyrations of market quotes. Don't miss our video news to keep close tabs on market developments. Subscribe to our channel and see you tomorrow.